Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is April 29th, 2025, and we're diving into Woodward's second quarter earnings report for fiscal year 2025. Joining us is John, senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. Woodward, a leader in energy conversion and control solutions, has just released their Q2 results, and there's a lot to unpack.
Revenue and profitability overview. Let's start with the top line. Woodward reported net sales of $884 million for the second quarter, a 6% increase from last year. John, what are the key drivers behind this growth?
The growth in net sales is primarily driven by strong demand in their aerospace segment, particularly in smart defense and commercial aftermarket activities. Despite some challenges in the commercial OEM and defense aftermarket, the overall performance was robust.
And what about profitability? How did Woodward perform in terms of earnings?
Woodward's net earnings increased by 12% to $109 million, with an adjusted EPS of $1.69, which is a 4% increase. This reflects their effective cost management and operational efficiencies, even in a volatile market environment.
Segment performance analysis. John, can you break down the performance of Woodward's segments for us?
Absolutely. The aerospace segment saw a 13% increase in revenue to $562 million, driven by strong demand in defense OEM and commercial aftermarket. The segment margin also improved to 22.2%, thanks to price realization and volume growth.
And how did the industrial segment fare?
The industrial segment faced some headwinds, with revenue declining by 5% to $322 million. This was mainly due to lower volumes in China's on-highway market, although there was some offset from price realization in other areas like power generation and oil and gas.
Cash flow and financial position. Let's talk about cash flow. Woodward reported a decrease in cash from operations and free cash flow. What does this indicate?
Woodward's cash from operations decreased by 20% to $78 million, and free cash flow was down 28% to $59 million. This decline is largely due to increased capital expenditures and changes in working capital. However, the company remains committed to returning value to shareholders, as evidenced by their $44 million in share repurchases this quarter.
Guidance and future outlook. Looking ahead, how is Woodward positioning itself for the rest of the fiscal year?
Woodward has raised the low end of its sales and adjusted EPS guidance, now expecting sales between $3,375 million and $3,500 million, and adjusted EPS between $5.95 and $6.25. The aerospace segment is expected to continue its strong performance, with sales growth projected between 8% and 13%.
That's promising. What are the key factors that could influence their performance going forward?
Key factors include managing the announced tariff levels, maintaining strong demand in their core markets, and navigating any potential global economic uncertainties. Woodward's leadership remains confident in their ability to achieve sustainable growth and enhance shareholder value.
EPS forecast discussion. John, let's discuss the EPS forecast. Analysts were expecting an EPS of $1.44, but Woodward reported an adjusted EPS of $9.60. What does this tell us?
This is a significant beat, with Woodward exceeding expectations by 25. It highlights the company's strong operational performance and ability to manage costs effectively, even amidst challenging market conditions.
How might this impact investor sentiment?
Such a beat typically boosts investor confidence, as it suggests that the company is not only meeting but exceeding market expectations. This could lead to positive momentum in the stock price.
Key takeaways. In summary, Woodward has delivered a strong second quarter with impressive growth in their aerospace segment and a notable EPS beat. Their strategic initiatives and operational efficiencies are clearly paying off. John, any final thoughts on Woodward's investment prospects?
Woodward's ability to navigate a volatile environment and exceed expectations makes it an attractive investment. Their focus on sustainable growth and shareholder value is commendable, and they seem well positioned for future success.
Thank you, John, for your insights. And thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Woodward's performance in the comments below. Until next time.